Charlie Munger's greatest financial advice. According to Charlie Munger, investors should look beyond the inflationary spike, support both fossil fuels and renewable energy, and never touch cryptocurrencies. The Australian Financial Review asked Munger to discuss his investment tips in an exclusive interview following his personal investment with Melbourne-based investment firm Stonehouse Corporation. Munger's investment philosophy is to look beyond short-term economic fluctuations and target excellent businesses for long-term ownership as a business partner of Berkshire Hathaway chairman Warren Buffett. He is not concerned with macroeconomic trends, he says. Like the weather, he just ignored it. He simply tries to invest whatever capital he has as well as he can and accept the results as they come. He just takes whatever opportunities come his way and hopes to get his fair share. What he said? I'm just trying to invest my money and Berkshire Hathaway's money wisely. All these people blabbering on television don't think like I do. I've witnessed a lot of inflation. Many global investors are concerned about inflation and aggressive central bank interest rate hikes, but the 98-year-old is unconcerned. I'm always aware of it, Munger says. But it doesn't stop me from working. I'm 98 and I've seen a lot of inflation. I intend to survive inflation. I've seen a lot of it already in my long life, so it is not discouraging. Inflation, according to Munger, is always with us in an episodic way. That's what modernity brings about. As a result, eventually every currency will be worthless. That is my basic cynical point of view. Nonetheless, Munger admitted that rising interest rates would significantly impact stock prices and business valuations. Despite this, his outlook is largely unaffected by the recent corrections in the US stock market. The stock market is always going up and down, he says. Berkshire's massive cash pile has been deployed, shrinking from $147 billion at the start of the year to $106 billion in the first quarter. Berkshire Hathaway announced in May that it has invested $51 billion in stocks and repurchased $3.2 billion from its own stock. We didn't save money because we expected a big drop in where you could spend it, Munger says. We saved the money because things became so competitive and prices for good businesses. We couldn't find a good buy. But of course, we hope that Berkshire will eventually find a good investment for accumulated cash. His financial advice: fake knowledge. Smart people are not immune to professional disasters caused by overconfidence. We have become so accustomed to delegating our thinking that we have forgotten what it's like to comprehend something from all angles. We'd forgotten how much work that entails. On the other hand, the path of least resistance is only a click away. Fake knowledge obtained from reading headlines and skimming the news appears harmless, but it is not. It causes us to be overconfident. It's better to remember a simple rule. Anything you find quickly on Google or Twitter is likely widely known and should be given manageable weight. Munger adds, if people weren't so often wrong, we wouldn't be so rich. Wisdom and circles of competence. Knowing what you don't know is more useful than knowing what you do. The dawning of wisdom is acknowledging what you don't know, identifying your circle of competence, and whenever possible, use your knowledge to avoid things you need help understanding. There are no points for difficulty in life or at work. Avoiding stupidity is less difficult than pursuing brilliance. Of course, this principle is related to another of Munger's quotes. People are trying to be smart. All I'm trying to do is not to be idiotic, but it's harder than most people think. Deal with reality. I believe that one should recognize reality even when one does not like it. In fact, one should recognize reality especially when one does not like it. Munger clearly benefited from Joseph Tussman's knowledge. This entails confronting harsh realities that you may prefer to avoid. It entails meeting the world on its terms rather than how you would like it to be. If this causes temporary discomfort, so be it. Your pain is the breaking of the shell that encloses your understanding, writes Khalil Gibran in The Prophet. Maximizations or minimization. In business, we frequently discover that the winning system goes almost absurdly far in maximizing and or minimizing one or a few variables like Costco's discount warehouses. Nothing is a priority when everything is a priority. Trying to maximize competing variables is a sure way to fail. Choosing one variable and focusing relentlessly on it, which is an effective strategy, deviates from the norm. Competing with companies that correctly identify the variables to maximize or minimize is a challenge. When you concentrate on one variable, you increase your chances of being quick and nimble, and able to respond to changes in the terrain. Thinking. We are constantly learning, modifying, or destroying ideas. One of the most valuable qualities you can acquire is the ability to quickly destroy your ideas when the time comes. You must force yourself to consider opposing arguments. It's bad to have an opinion you are proud of if you can articulate the opposing arguments better than your opponents. This is a fantastic mental workout. What do you think of the financial advices by Munger? Let us know in the comments below.